The $11.5 trillion asset manager is exposing that the perfect portfolio includes Bitcoin. In their latest report, BlackRock is hinting at a massive run-up to a potential seven-figure Bitcoin price. But just how high is Bitcoin going to run, and how much is BlackRock suggesting that you allocate to your portfolio? Of course, we're going to dive into this report and break it down to see just how much Bitcoin BlackRock is suggesting that you hold, and what that means for Bitcoin and the impacts going forward. So we're going to dive into it here and talk a little bit about just the preface here. So it did come out about 11 days ago, so I'm running a little bit behind here, but Bitcoin's value drivers, I thought that this was pretty interesting, where it's talking about the predetermined supply met with the growing demand as one of the changes involving investors' belief in Bitcoin's potential to become more widely adopted. Now, I think this is super interesting because recently they had an educational video come out, and I talked about that in a previous live stream, where they were discussing the predetermined amount, the fixed supply of 21 million, hinting at, well, I don't know about this one. What is it going on here? This is not necessarily built into the code. How can this change? Yada, yada, yada. But it seems like they're determining that this is a huge value proposition for Bitcoin and that it cannot go away. So let's dive into it more, right? So they talk about sizing and allocation. So taking all this into account, we make the case for including Bitcoin in a multi-asset portfolio, provided you believe it will become more widely adoption in the future and more comfortable of bearing the risk of potentially rapid price plunges. Now, this is where I think is interesting here, right? So they talk about in a traditional portfolio with a mix of 60% stocks and 40% bonds. If you ask me, I think that 60-40 portfolio is a bunch of baloney at this point. But hey, BlackRock is still, pulling from that aspect or that size of thinking. So let's get back to it. Those 7 stocks each account for an average of the same share of an overall portfolio as the 1% to 2% allocation to Bitcoin. Now, what does that mean? That means the Magnificent Seven that Bitcoin is being compared to by BlackRock here is very eye-opening. A traditional investor is looking at BlackRock the same as the Magnificent Seven, as same as NVIDIA, the same as Microsoft, the same as Amazon. The list goes on to those Magnificent Seven stocks that everybody feels like is seemingly a no-brainer to hold in their portfolio. If I were to tell you you're holding Apple, would anybody bat an eye? I don't think so. Now, on the other hand, if I were to tell you to hold Bitcoin, would people bat an eye? That is a little bit different of a story. But this is what BlackRock is comparing comparing holding Bitcoin to, which I think is very interesting and should not be undermined here, because it is very, very big comparison here. So why not more? Going beyond that would sharply increase Bitcoin's share of the overall portfolio. And here's the chart, right? So a 1% allocation only adds 2% more risk to your portfolio, at least according to BlackRock here, where a 2% allocation will add a potential of a 5% risk. And then 4% allegedly adds a 14% increase in risk, where the average Magnificent Seven stock being added adds a 4% risk. So you can see here that adding 2% simply just adds a 5% risk, which is similar to what a Magnificent Seven stock could have, right? So looking ahead, Bitcoin should indeed achieve broad adoption. See, if you look at that, it is saying that, or BlackRock's report is saying that Bitcoin looks like it has the potential to become less risky, and that it might no longer have a structural catalyst for further sizable price rises. And we're going to get into this PDF report here now. So, and greetings to Johnny in the chat, and Merry Christmas to you as well, brother. Thank you so much for joining in. Now, let's dive in to this PDF report that we've got here for BlackRock, right? So they're saying allocating these different Bitcoin portfolios. So let's dive into a little bit on the summary here. I'll make this a little bigger so you guys can see, but since its inception, since 2009, Bitcoin has boomed. That's right, ladies and gentlemen, it has boomed and spurred the launch of a wide variety of cryptos, right? So that is true, but like we say here, we're Bitcoin and Bitcoin only. So I think this is really, really important here. They are looking at widespread adoption. What could spur this? Several factors are at play. It allows for seamless and instant transactions across borders. Anyone can participate in it, and it's decentralized with no direct government ability to increase or decrease supply. They're telling you right here, folks, this is a non-inflationary asset. So this is vital here. I'll even make it bigger for you so you guys can see. I want to repeat that right here where it says it's decentralized with no direct government ability to increase or decrease supply. So taking all this into account, we do see a case for including Bitcoin into multi-asset portfolios and so on and so forth. So how can investors think about a Bitcoin allocation? Bitcoin cannot be compared to a traditional asset, but from a portfolio construction perspective, the Magnificent Seven group of mostly mega cap stocks is useful for a starting point. So I think that this is absolutely massive. BlackRock is comparing Bitcoin essentially to the Magnificent Seven stocks, saying like, hey, you know, you wouldn't bat an eye if you held Apple. You wouldn't bat an eye if you held Meta. You wouldn't bat an eye if you held Nvidia. So why not hold a little bit of Bitcoin here, right? So now let's keep diving into this report because there's a lot of great nuggets here that they're hinting at or showing just straight, because you got to remember who their audience that they're talking to, folks. They're talking to investors who are not looking to take a huge amount of risk, right? They want to preserve their capital. So, you know, preserve their purchasing power. So what are some of the things that they're looking at, right? They're looking at the growth of the ETFs as one of the major selling points here, right? So Bitcoin itself is a maturing digital asset and becoming more accessible to investors via exchange traded products. So ETPs, right? So the ETFs, which were launched earlier this year. So the ETPs and other funds now hold over 100 billion, hold over 100 billion in Bitcoin. Now, that's not a number to scoff at here, folks. That is an absolutely large number when it comes to Bitcoin and the amount that was scooped up. I mean, the ETFs were rumored that, you know, I don't know how this experiment's going to really work out in the United States. There's not a huge demand for it. There's not really much really going for it. Well, $100 billion has been poured into it in less than a year. Less than a year, folks. So it seems like the demand is there, and what everybody was initially saying was incorrect. Now, Bitcoin soared to new record highs after Donald Trump won the election, and since Trump's statements and personnel picks have supported of cryptocurrencies, they've reinforced the hopes of wider adoption is now more likely. So the predetermined supply of Bitcoin with the future issuance through mining is well known in advance. It's what we talk about a lot here, folks, is that the Bitcoin mining is not inflationary, right? Or the way that Bitcoin is issued is not inflationary and is not volatile. The M2 money supply, the underneath valuing of Bitcoin is the thing that is volatile, right? The amount of money in circulation is the thing that's volatile. It's not Bitcoin, right? We know how much Bitcoin is going to be put into circulation every single day, essentially every single 10 minutes. So on that note, how could it be volatile? Doesn't make sense, right? We know how much Bitcoin is being circulated, but the thing that's volatile and controlled is the amount of money and that government is putting in circulation. Now, let's keep diving into this report here, right? So we believe that the period leading up to widespread adoption could be where the biggest future return of potential lies. Now, we're going to get into all of that on how much I think that they're hinting at of a potential return here. But, I think that, that price, I'm going to save it for a little bit. I did a little quick math here before, so stay tuned, folks, to see if you agree with it or not. But on that, I want to get into these couple charts where I found here very interesting, right? So, and what's up to my buddy Jim Cascader in the chat? May Santa put some sats in your stocking. I couldn't agree more. Let's give some Bitcoin to our family and friends. Help give them generational wealth, ladies and gentlemen. To bring all the holiday spirit, right? I mean, sending sats to your friends and family could be one of the more jolly things to do. But let's dive into this chart, right? The volatility corrected and uncorrected. And I'm going to hide myself here so you guys can really see it, right? So they excluded the times pre-2014, which I think is interesting, right? Because pre-2014, Bitcoin was in its most volatile times, right? So you're seeing, like, since 2014, Bitcoin's volatility has been decreasing over time, and their correlation with equity returns has been increasing, right? So they're essentially highlighting here that, hey, if you want to put in the Magnificent Seven, why not include Bitcoin, right? The 1 to 2% allocation, it's getting less volatile over time, and it's correlating more and more with stocks over time, where this correlation is showing a much more positive return here. And then this other chart here on the right, on the Bitcoin bus, so it's looking at the Bitcoin's biggest drawdowns, right? So it's seeing these 80% drawdowns, but it's highlighting that these drawdowns are getting a little bit smaller every time as well, right? So they're talking to a specific audience who might be afraid of, some of these boom and bust cycles that Bitcoin is known to have, right? So they're saying, hey, put in 1 to 2%. It's like a Magnificent Seven stock. The risk appetite for this is, maybe 2 to 5%, depending on how much you put in there. If you put in 1%, it's only 2% risky, right? At 2% riskier. If you put in 2%, it's only 5% riskier. So why don't you view this as a Magnificent Seven stock? It's not quite as risky as you may think, especially with the growing adoption, right? So, they're showing that these boom and bust cycles are getting a lot less than previous, and within every cycle, right? So I see here we've got one of these bears in the chat. So T-Fish, welcome. Bitcoin is not Satan's currency. I believe Bitcoin and the true hard money principles of Bitcoin would be something that would save society, get it away from these corrupt fiat society that we've been in. So I feel the exact opposite here for you, buddy. And I agree with my buddy Jim, where Bitcoin is an unmovable object. Bitcoins are the unstoppable force. Fade at your own risk, man. I love the way that Jim's saying that, because Bitcoin is not volatile as I'm lining out here, right? We know the issuance cycle. It's becoming less risky with these cycles, right? It's becoming a little bit more correlated with stocks and other assets as we're seeing it pump through here. And I think that that's going to continue, right? So, and I think BlackRock is really highlighting that report here, where they're saying, hey, everybody's now talking about it, BlackRock advocates for a 2% portfolio allocation, which could boost returns despite potential risks, right? So based on their research, they've urged investors, urged them that a suitable governance and risk tolerance could consider allocating up to 2% to Bitcoin, right? So now everybody's talking about how much Bitcoin could you have in your portfolio. You know, it is a topic of discussion here now, right? We're getting major news outlets paying attention because BlackRock is comparing this $11.5 trillion asset manager is comparing Bitcoin to the Magnificent Seven stocks, simply as risky as holding Apple. BlackRock's words, not mine. Simply as risky as holding Nvidia. BlackRock's words, not mine, right? So it's looking at holding Google, Amazon, Meta, Apple. BlackRock's words, not mine. Now, take for all this as you will, right? I mean, BlackRock obviously has its ETF products and other aspects of it, but it is interesting that you know, they've had a lot of reports come out, even one that leaked not too long ago about BlackRock saying the optimal allocation is much more than 1 to 2%. They actually had a quant report that was leaked years ago. I don't know if you guys remember this, nearly 1 year ago, that BlackRock revealed a study that the optimal Bitcoin allocation in a portfolio is 84.9%. 84.9%, right, folks? Where this asset allocation study said the world's largest and most influential said the game-changing Bitcoin revelation for investors, which are seeking to maximize returns here, right? So BlackRock is saying, hey, just put in 1 to 2% now, but the optimal portfolio previously that they're telling you a year ago was simply, you know, 84.9%. Really not that big of a difference, right, folks? No, that is an absolutely huge difference. We've seen billions of dollars flow into BlackRock's ETFs products, and we're seeing it, you know, dramatically rise here. But I want to go through some of the quick maths here of what, you know, this 2% increase could really show here, right? So let's look at BlackRock for its, you know, or Bitcoin for its market cap here, right? So Bitcoin's got a market cap of $1.846 trillion, right? So if we get that to increase by and get to 2% more money, right? 2% more money of everything. I did quick math prior to this. It's about $9 trillion of the 2% allocation of just investor money, right? So the quick math, if you multiply that price of 93,000 that we've got here, so we've got a little bit of a bearish day, a little bit of a dip. If you multiply that by, you know, the just under 4 that you get, or the just over 4, excuse me, to get that 9 trillion market cap, you get a Bitcoin price of $456,290. So just under $500,000. If you just put that simple 2% allocation or 1% allocation, excuse me, that BlackRock is suggesting, that 1 to 2%. Now, I do like to look at this chart here from my man, Willie Woo, who really highlights the differences here where, you know, BlackRock is suggesting that you put 1 to 2%, but you can't just necessarily put 1 to 1 when it goes from market cap gain per dollar invested. It looks like we got a 5.75 market cap increase per dollar invested, right? So what would that lead to? Well, if we got a 5.75 increase on everything here, and I know it's kind of hard to see on this screen, folks, but follow my math with me a little bit. If you multiply that 456,000 by 5.75, you get you get over $2.6 million per coin. Now, obviously, BlackRock is not implying that Bitcoin is going to go to $2.6 million overnight, But allocating more of this 2% portfolio to, or allocating 2% of your portfolio to Bitcoin can see the demand increase and see these things really take off, right? I mean, even though we aren't seeing it right now here, folks, I mean, I hinted at it earlier in this live stream that we're, still just floating around that 93,000, and we're not quite to that, $2.6 million per coin just yet. But I think that we're getting there, right? I mean, we do have, Christmas coming up here. Maybe people are going to be gifting Bitcoin. Michael Saylor continues to keep buying Bitcoin, right? I mean, he bought more Bitcoin today, or at least announced it at an average cost basis of 106,000. So if Michael Saylor continues to dump money, even buying the top, why are you bearish, folks? I have no idea. But let's get back to this point that T-Fish, my little troll in this chat, so kindly brought in here earlier. Well, he said Bitcoin is Satan's currency. Well, if you really try to think about the things that fiat currency has corrupted, it's corrupted the food industry. It's corrupted a lot of other things, including the health insurance industry. You've seen a lot of things that Bitcoin has, or that the fiat money has essentially corrupted, right? So you saw in the news here lately that a giant major insurance carrier has denied over a third of your claims, whether you're broken your arm, something along those lines, right? But if I were to tell you that there's a place where you could find awesome doctors, negotiate your bills, fund those bills through a peer-to-peer funding platform, and you don't need health insurance, you can avoid all that hassle. Well, I've got the perfect solution for you, folks. It's CrowdHealth. You can go to joincrowdhealth.com. You can enter promo code GreenCandle, and you can get the first 3 months for $99, and the rest would be $149 following that. But you could join a group of peers that will help you avoid the hassle of dealing with a health insurance company, dealing with all the hubbub. Did you meet your premium? Did you meet your deductible? Did you meet all of these different crazy things you got to worry about and scramble to by the end of the year? You don't need to worry about that anymore, folks. You can simply just, hang back, get the care when you need it, and go from there. And you don't have to worry about what has been corrupted based on this fiat system here, right? So I think it's one of the best things that you can do outside of holding Bitcoin in cold storage. Now, the best way to hold your Bitcoin in cold storage is stamp seed. You don't want to hold your Bitcoin seed phrase, your generational wealth, on a piece of paper that could get wet. I've got coffee here. You could spill your coffee on it. You can have your computer crash. You could do so many other things. Well, just safely secure it on a stamp seed punch plate, folks. They've got the best punch plates in the game. They've been battle tested, and they're titanium. They've even got some fun things that you can get and commemorate, some of these great Bitcoin milestones, whether it's 100K, whether it's a metal Bitcoin stamp that you'd like to get. They've got everything from 12 to 24 words, whatever you're really feeling. Get your Bitcoin off exchange. I couldn't stress it enough. Use promo code GreenCandle, all one word, for 15% off. That's right, 15% off, folks. So go ahead and get your Bitcoin off an exchange, because, BlackRock suggesting you allocate at least 1% to 2% of your portfolio. So would you risk holding your generational wealth with a custodian that could get hacked and do all that stuff and steal your keys from you? I wouldn't do that. So take the dive down the rabbit hole, folks. Understand why BlackRock is saying allocate at least 1% to 2%, and hit that like button, hit the subscribe button, tell a friend to tell a friend, and thank you guys all for joining in the chat this time. I'll catch